to the It Crowd podcast. My name is Josh Lowrey. We are coming to you live from the Daniel Energy Partners Thrive Energy Conference from Dyken Park in Houston, Texas. I am joined, as usual, with the co-host extraordinaire, Mr. Richard Rodriguez. How are you, sir?
Great, Josh. How are you?
Richard, I've missed you. I haven't seen you in a couple weeks, buddy.
It's been longer than that.
It has been.
It might be the longest in years.
It's been too long.
Too long.
How have you been?
Great. I mean, awesome. And then what a way to reconnect back here again at Thrive.
This is our sixth Thrive. The biggest one we've ever had. Attendance is up about 400 people, but it's the right 400.
Exactly.
We are on the suite level during the, if you hear noise in the background, what that is the, we are during the VIP happy hour. So if you hear everyone's a little loose, everyone's having a good time. Speaking of 400 new people, this is what we like to do. We like to keep our guests in limbo as long as possible, including the 45 minutes you had to wait to get on the podcast. So, gentlemen, have you ever been to Thrive before?
This is my second year, and
I've been 3 times now.
Phil's third, yeah.
Oh, man.
Veterans.
I thought you were going to say the first. Well, welcome back.
Thank you. And especially, I'm just so happy to be here for this joyous reunion between the two of you. It's been so long since you've seen each other, and I really...
Hey, buddy.
Yeah, I feel lucky to be here for that.
When'd you guys get here? So those voices you hear that are making fun of Richard and I for having our little love affair there, this is Mr. Jim Gordon and Phil Lavis. Hello, Phil Lavis. How are you, sir?
Good, thanks, mate.
And Jim Gordon, how are you, sir?
Never better.
Ooh, I like it. And you guys, let's go. You got some cool titles and great company here. Jim, you are the director of... I'm going to screw this up. How do you say it? Macquarie. So, by the way, I can delete this whole thing. That's what a podcast is for. So, you are the director of Macquarie Group's Energy Resources Sustainability Practice. Correct.
Close enough. Yeah.
Well, this is what I'm reading correctly here. And Phil,
reading what's on the page. I like that.
What are you?
Managing director is the title.
That's somebody gave me incorrect. By the way, that's a huge difference. Managing director is a big
difference.
That's a title well earned, my man. By the way, you know a lot of people here. This is how have we not met? How are we not friends yet?
It's a great question. I'm gonna blame you.
That's fair. That's fair.
No, honestly,
because you really do. That's why I'm like, you clearly know your way around this room.
This is a small town and a tight industry. If you know one person, you know 10, right? So. It's just kind of hanging around the hoop, and eventually you'll get introduced to everybody in this place.
I like it. And Phil, and make sure somebody's in trouble if this is wrong. I have you as the senior asset manager for Macquarie's Group, specializing in asset finance division.
That's actually 100% on.
Hey now. So everyone, you're going to hear Phil's accent. It's pretty cool. It's a Australian Tennessee with a Tennessee twist in there. What part of Australia are you from?
I lived all over. Grew up way out country. Spent a long time in Adelaide and a bit of time in Sydney for the bank before they sent me to Nashville, Tennessee.
They said go to Nashville from Sydney?
Yeah. When you grow up in country Australia, that seemed like a pretty good deal.
Yeah. I get it. All right, so you guys you're a much bigger bank and group than I was aware of. We had 45 minutes while we were waiting for our other friend to get off the... I won't tell the audience who took 45 minutes of time to get off the stage, but
you can guess.
People know us, and they're going to know who talked for 45 extra minutes just by me saying this. So we had a little time to catch up. So you guys are a large group.
Yeah. So
give us the scoop.
Thanks. Yeah. For the uninitiated, Macquarie is a Sydney-based global financial holding company. So we've got businesses and everything from sort of traditional investment banking, so M&A, advisory, capital markets. To Macquarie Asset Management, which is the other people's money division. Mostly that revolves around investments in the infrastructure space. So we own toll roads, airports, water treatment facilities. And then we sit within a vertical called Commodities and Global Markets. That vertical contains our upstream lending business, your more vanilla like rates and currency hedging. And then we are one of the largest traders of both physical and financial crude, refined products, and natural gas in the Western Hemisphere. Phil and I sit in a sub-unit of that called Specialized in Asset Finance. And what we do is deploy capital against specific discrete pieces of equipment or technology, depending on how sophisticated you want to sound when you're explaining it to somebody.
Fair. Okay.
Yep. And so I, as you might imagine by my attendance in this conference, cover the oil and gas and distributed power spaces. So in practicality, what that means is we're doing loans, leases, speculative purchases, trades of gear that's used in the oil field. So anything from rigs to frac kit, gas compressors, infield power gen, or mobile, larger scale power gen as well.
So kind of everything that matters right now.
It's interesting. It's a hypothesis that I think we had as a team when we started. So I've been at the bank for 8 years. Joined what was initially a mining equipment finance team. And given my background, I've been out of school for 16 years now, and all of that's been devoted to various places within the hydrocarbon ecosystem.
Really? I
Yeah.
found that is a unique track, considering, if you were from Texas, you're not.
No. Again, and the accent thing here, it's New Jersey. If
yeah.
had a hard time placing
I'm complimenting you, because that is a unique track for someone who's not from Texas.
I graduated with a finance degree in 2009, which was like among the worst times in history to graduate with a finance degree.
Fair.
And really the only gig that was available, I knew a friend of a friend was on Morgan Stanley's physical refined products desk. And I just happened to kind of stumble my way into that, and have always found it fascinating, and have kind of ridden the wave there from that business to covering gas and power derivatives to broader corporate coverage, and then that all sort of dovetailed when I took this gig. In what was the mining equipment finance team, I sort of went to our boss and was like, "Thank you for hiring me. I don't want to do mining equipment finance, but I bet." Based on the market dynamics that, there's going to be a lot of room to run when it comes to financing gas, and oil equipment, just based on the rate of adoption of new technology in the space, right? And on the power side too, use of sort of stranded gas to generate electricity was fairly novel when we were talking about doing it 7-8 years ago. And now this entire conference is sort of about that. A stop clock is right twice a day, and I just happened to be right a few years ago when we started looking at it.
Talk about hitting the right time. Not only timing, but, there's so many things to that, because it's not just the market, it's not just the technology, but it's all of it coming together, right? So when you look at, take it back then, that 8-9 years ago, when you were valuing assets, I don't want to call it dumb iron, but there was a lot more in the valuation on that. How is technology coming into, and how has that changed the way that you're valuing the assets now?
Yeah, so this is a question that's better suited for Phil. So Phil manages our equipment fleet for North America, and so when we quote pricing or structure a particular solution to a client, we're using Phil's analysis of what the future value of that gear is going to be. So he can expound a little bit more on kind of how we arrive at these figures.
I just want to say, I don't think I like Phil. He's tall, he's got great hair and an Australian accent, and he's smart.
That's unlucky for you then, mate.
It's just I feel like he's very likable too.
Man, the haters are furious.
Yeah, but go ahead with your answer.
You're going to be turning my mic off soon or something?
Yeah,
No, I think
but thanks for coming on the show, Phil.
I really appreciate it. Love you guys too. Yeah. No, I think, and backing up a little bit on that question there, like the core of what we do is focused on the asset, right? You can look at all the credit metrics and the financials of a company and so on, right? But the core of what we do is we look at the asset and say, what is this worth, and what will it be worth in the future, right? And the technology is a huge part of that, right? We're seeing across multiple sectors of the upstream equipment industry, it's like there's multiple options, right? And there's still kind of shaking out what's going on. We've seen in frac, right, going from tier 2 to tier 4 to DGB, right? And now it's kind of where it goes next. There's multiple options, right? So, we're here to support our customers and say, if this is what the technology you're committed to, we can follow you with the financing on that, right? But a big part of that is, there is some projection and analysis of, okay, we're committed to this for however long we finance our customer, right? We're not writing a check and walking away, right? So, it's like, okay, if we get this equipment back at the end of our lease term, which customers have the right to do, or there's a default or something, can we realize value in this asset, right? Mm-hmm. And, you look at...
Is that market still there?
Yeah, and like the basic analogy I do, like, the easy side of equipment financing, like everybody does highway trucks and trailers, right? Because you can sit there, these trucks and trailers are worth that, right? Like the expertise and skill we bring to this in the asset management team is, we're doing this on rigs and frac pumps and compression and, a whole variety of assets where that's a much harder project to say, what is this worth right now? I can't just, open up Ritchie Brothers auctions and see what stuff's selling for an auction, right?
Yeah, right.
So, but then it's which technology do we think is going to win? We're not in the business of picking winners, right? But we need to understand what our customers want.
To that point, because technology moves so fast, how do you rate the risk of like faster obsolescence in certain technologies?
Oh, it's a huge one for us, right? And, you kind of look at, is it progressive and iterative, which is probably, a 10, 20-year process before something loses value? Or is it we have a step change right now and everybody's going from, diesel to gas or something like that, right? And it's something we look at, it's industry specific and asset class specific, but, we've done that in the mining sector for over 25 years now, right? And we apply the same theory to the upstream sector.
As more of the technology, again, continues on this, because Josh will hit me here pretty soon from nerding out, but my last nerd out question, as more and more comes in, and then there's more and more connected devices through all of these assets, how are you basing the risk on the cybersecurity level when you're kind of rating that?
That's a good question, and I think, fortunately, the equipment we look at is kind of mostly dumb equipment, right? Like there is a lot of technology associated with it, but at the end of the day, you have heavy engines, you have heavy transmissions, you have heavy top drives, you have power gen, right? The technology is there, right? And, our customers, is a big part of when we look at our customers, right? We want to know they are taking care of that equipment, they have protected the cybersecurity side, right? It is their information on there as well, right? That's protected. But it's something that, does come up occasionally where we look at equipment, it's like, well, this is kind of wide open. And, there's a big question mark that we have to look at there through our due diligence phase on the cybersecurity and technology side.
Yeah, and I think to kind of further that point, but to broaden it a little bit, we want to make sure that when we're getting something back or God forbid we have to enforce, that what we're getting back is something that you can use on its own, right? So to use like cat vision as an example, right? Like that makes those units run a lot more efficiently because exactly that they're running at capacity, right? But ultimately, like you don't need that, strictly speaking, to operate the machine that we're getting back, right? So I think your question about obsolescence, a lot of and again, this is more Phil's world than mine, but a lot of the analysis is like, is this a VCR? Is this technology that's going to be dead, or is it, to Phil's earlier point, like, is it iterative? Is this just like, is it a used car, right? Is it a used car that has a tape deck? It's fine, still drives.
Yeah.
Right. Yeah. So, I think we like to think about the assets that we finance more from the perspective of opportunity. Like, if we get this back, is there upside to it more than through the lens of risk? If we're really worried about whether something is going to maintain its value, then it's probably not the deal.
Yeah, it's not a great investment, right?
Yeah. And I think like the key one on that side is proprietary technology, right? Where a customer's like, hey, I want you to finance this that I make for myself. Like, that's probably one of our most difficult propositions, right? Because like, what
no one else can use it.
What are you going to do with that?
Yeah.
Well, I mean, you're also, it's just like, we've done a couple of these today, and just like anything in life, you're looking for a good partner. Wow. Right?
Yeah.
You want somebody that's a tier one company wants a tier one company.
Yeah. And, I would be, I'd be lying if I said we finance like all investment grade names. We certainly don't.
Sure.
Right. But you have to kind of triangulate like something between the balance sheet, the value of the equipment, and the underlying operation, right? Is it a a trickier balance sheet with like top flight equipment, okay, that's something that we can probably explore. Is it, maybe it's not the best balance sheet, but the economics of the underlying operation, it's good acreage, right?
Right.
Then that's something we can, probably structure around. If two of those things are questionable, it's probably not the deal for us, because we are a regulated entity too. I mean, I think we've got a pretty interesting and bespoke set of products that we offer, but we are a bank at the end of the day.
How much, listen, we're at an oil and gas show, we're talking about IT, but the word of the day is data center.
Yeah.
Right? Power, data center.
Yep.
So, tell me about that. What does that look like in your world these days? I feel like that is just permeating through everything.
Yeah, and, so a couple years ago, actually, we were, I think, probably the first large institution to finance GPUs, so the actual processing componentry in a data center.
Okay. That is...
Yeah, the deal was very tightly structured and priced appropriately. And now those deals get done for like SOFR plus 3.5, right? So
you just had no bearing that many years ago, right?
Yeah. So, I think that's actually kind of instructive as to like what we look at. This is an exaggeration, but we joke if there's another bank in the room, we've probably already lost. Just because we're not the cheapest guy on the street. We don't get into races to the bottom. So that's an example, I think, of the kinds of situations we want to see, where it's like we recognize that that's a market that hasn't been saturated yet, but we're comfortable with the value of what we're financing.
So
right?
let me ask this real quick. That kind of brings up a point. I understand the concept that there's another bank we've lost, and that would imply that there is going to be a cost decrease to get the business, right? Okay, let's just assume there is another bank in the room. What makes you guys better?
Yeah.
Or the value, whatever.
Right.
Why are they picking you guys?
Right. Well, I think the operating lease product, I think, is something that we do in a way that other banks don't look at. Like Phil mentioned, like your Main Street bank might finance like a fleet of tractor trailers, right? And they have a set residual value that they assume for each and every tractor trailer they finance, and then they've been doing it for 30 years, and they assume X% they'll lose X%, but they've priced it at Y, and so in their model they make a safe return, and that's fine. They have easy access to cheap capital, and that's just not a business we're interested in getting into.
Sorry to add on to that as well. I think when we look at a client, right, this sounds a bit cliche, right? But we're looking to provide solutions, right? If you want the cheapest interest rate, we can do cheapest interest rates, but there might be somebody else who can do that for you, right? If you want something like, 100% financing or options to return, or you're doing a startup business, right? Or you're doing project finance or something like that, which takes a lot more structuring or some weird financial product, that's something we can do as well, right? But it really comes down to the customer, and it's like, what do you want? If it's lowest monthly payments, we can structure something on that too as well, right? It really comes down to what's the end objective for the customer.
And I think we arrive at that via sector expertise, right? Like the equipment finance division of name any bank. There's a lot of smile and dial involved in that.
I can see that. Yeah.
It's just sort of a volume play, which again, nothing against that. If that's a fine and profitable business model for plenty of people, just not us.
By the way, you guys are hosting you are the sponsors of the happy hour.
We are.
Thank you. I'm taking my first drink of the happy hour.
You're very welcome. So when we talk about an operating lease, and this is probably, apologies if this is remedial to you guys, right? But what we're doing is we're buying the asset in question for 100% of its cost. We're leasing it for a fixed monthly payment, and then we're holding a large residual value position in that gear. So if we're talking about something with a long useful life, turbine, gas compressor, things that run for 20 or 30 years, like we're comfortable holding a position that's reflective of that, because we know all of the people in the space who we could sell it to if it comes back to us.
That's not remedial, actually. I don't think there's a lot of people that aren't even aware that exists, I would think.
I'm not doing my job then, because...
Well, I mean, I found out, we mentioned forgings earlier.
Mm-hmm. Yeah,
there's a company up in Oklahoma that we worked with that they did that to the entire forging company.
Yeah. Right. And so we're holding a residual, and then at the end, our lessees have the right to buy the gear for its then fair market value, extend the lease, or just return it to us. And so there's a very real possibility that we're left holding, double-digit millions of a particular thing that we've financed. And a lot that honestly, like most of the time, we just sort of say, make my day, because the reason we're financing the thing in question is because we see the opportunity for this to continue to run and generate value.
Well, they want the cash flow.
They want the cash, and they want the ability to use a new piece of equipment. We provide, and we provide them the ability to do that with no equity contribution too, for paying 100%. And then, we've been very lucky that, Phil's rolled up his sleeves and embedded himself in the appraisal and valuation, remarketing, auction ecosystems where, we know everybody who's going to take a used compressor,
right,
where they're going to put it, right? And, that's, I think, the other thing that sort of differentiates us is we have boots on the ground, right? We know OEMs, packagers, service providers, E&Ps, right? So the whole ecosystem and life cycle of what a piece of equipment is meant to do, from start to finish to then return to us, we see all of it, right? And all of that goes into our assessment of residual value.
Yeah, and that's something we've done for over 20 years in the heavy mining space, right? All the way from underground coal. I spent a lot of time underground in West Virginia over the years, where I absolutely do not fit in.
You don't physically fit either. The ceilings are very low.
It's a tough day.
I commend. I mean, truly, I'm listening to what you're doing. Like to dig in the way you dig in is really. I'm very much impressed with both of you guys. Seriously.
Thank you.
Yeah, you're in Texas, and you've done I watched you work the room, and you're talking about rolling through Tennessee and West Virginia.
Yeah, but so on the mining side, we've operated globally for over 20 years. We've got gear in the Arctic Circle. We've got stuff all over Asia and Africa, right? But we know those technologies so well, right? And we've kind of moved with the mining sector there as well, right? Which is exactly the same things happening in our history in oil and gas, right? Where, we've moved from the autonomous drive systems to the new fuel systems as well on the mining side, to the full connectivity on the mine sites. But, we can take that, 400-ton payload trucks out of North America. We know customers in Australia to move that stuff. Big move, yes, but we can do that sort of stuff.
Yeah, so you know the entire worldwide market there.
Yeah, and currently, in Canada, we have 320-ton haul trucks up there, full newest technology around that a customer needed for a short time. They gave back to us. I'm like, fine, we're getting we're remarketing those currently. If you need some, we've got some.
That's interesting.
Right, but they'll probably go to South America or into Australia.
Are you going to
Australia, right?
The construction show next week?
We'll be there.
Yeah, I would imagine. Yeah. That's right up your alley then.
Yeah, so, but we follow the technology, we follow the trends on that equipment, right? But we know the market so well where most finance groups would be freaking out. It's like, wow, I've got this huge asset sitting in the Rocky Mountains.
No, but you're gonna, there's a use for it.
Yeah, I didn't expect the customer to give it back to me, or I didn't expect them to default or whatever, right? But that's our skill set on the asset side. We know the value, we know how to sell it.
How much technology is being used in this world that you guys play in today? I know that's a loose term, technology, but
I think it will. To that point, I think there's different ways to define it. I mean, Phil made the point earlier about kind of how, to use frac as an example.
Okay.
The winners haven't been picked yet, right? Like, is the industry just going to embrace DGB entirely? Is direct drive gas going to be the thing that people pick? Is it e-frac? I don't think so, but some people are certainly going to use that. And the question is sort of like, what percentage of the market is using each of these things? And I think when you talk about technology, there's sort of the assumption that it's on the bleeding edge and may or may not work, right? And so those are the considerations we make when we're putting something together. And our base case assumption whenever we do a financing is that the units will be put back to us. But
yeah, and I think on the technology side, not to get vague on definitions, right, but we consider technology things like going from diesel DGB to electric drive frac pumps.
That would make total sense.
Things like connectivity and software and so on. they're a factor for us, but they're not the key one on value, right? Like people can retrofit something, their own technology or connectivity, a lot cheaper than what the overall package costs.
I guess that is a great distinction because, Richard and I, we're both oil and gas guys. Richard is now former oil and gas heavy and now into technology. And what we mean technology is IT and, there's obviously some equipment, but the world of oil and gas specifically means what you just described as technology, right? And very rarely means software when they talk about technology. Mm-hmm. But I just was wondering, because I was actually asking, and I appreciate making the distinction, does the efficiencies of the software and the ability to, find premature failures, et cetera, is that helping you guys preserve value?
Oh, absolutely. So, a lot of our process when we're looking at value, and, we finance a lot of used equipment, right? So we can use that connectivity to say, like, how many hours?
Yeah, you lied. This is 10,000 hours, not 3.
How many hours? What
right.
was our fuel consumption?
Right.
And we can run all this through. Yes, there's a headline hours number, but when you get into all those details, right, you can see how hard these engines worked, how much idle was on these things, right? And that's a very important thing for us, right, as a lender to actually have access to that data with our customers.
And I think for certain assets, it's almost a prerequisite, right? Like if you look at a drilling operation, there's so many factors at play there, like how many RPMs, the depth, the temperature, et cetera. And you want to know that the people operating that are aware of it and paying attention to it, right? If we do our homework and the people aren't utilizing, telemetry to provide that depth of information, whether it's on site or in their offices, right? Like, then they're not taking adequate care of the gear, and we're not interested in participating in that.
Arguably, the greatest technology for us, though, is GPS tracking, so we can go find it if we need to.
By the way, I can totally appreciate that.
Yeah.
So people give me notes. I'm supposed to read notes.
Okay.
What am I missing? What are we supposed to be going over that I'm missing?
I would say I would ask one question again on the technology side, more so about the evaluation side of it, because you talk about yourself and your teams rolling up your sleeves, getting out there, getting involved, knowing the market, hands-on. And then, obviously with every headline that's out there, AI is going to make everybody obsolete. So where do you see, or do you see a trend on the AI side in terms of asset valuation, and how does that play into things?
That one is very commonly discussed at all the appraisal conferences, right? And there's a lot of people looking for solutions on that. And arguably the AI, with the ability to source and compute large amounts of data, is becoming more and more helpful on the more commodity-driven assets, trucks and trailers, skid steers, laptops, all those sorts of things, right? We still find in the sectors we play in, right, what's a frac pump worth? That's still to come, right? Like, where there's a lot more connections, network, relationships that we pull in for that on the AI side. But, it's definitely coming. Especially as well around the modeling and things like that, when we look at power turbines and so on, to be able to pull all that detailed data in together and say, hey, this is an accurate view, condensed accurate view of the condition of my equipment, rather than here's 10,000 data points in a spreadsheet that you're messing around with, looking like an idiot, right? So, that's coming. It's still very much a work in progress, and a lot of appraisers, probably including myself as well, just pride themselves on the dirty work in the field and say, AI can't do that, but it's definitely going to be.
So, we talked off camera about, we call it the widget, whatever the widget is, right? Banks and what you guys are talking about here, this is tough business to put, a face on, right? What is the value?
I think we got it back. Yeah.
What is the value or the widget of what you guys are really offering people here? When this person that's done listening to this podcast at the end, obviously you guys are likable people. I mean, truly. But like, what are they? They're going to hang up or turn it off. They're going to say, "Man, those guys do X, Y, or Z that I didn't know. That can help my business."
Yeah, it's a great question.
I am the greatest. This is the great question.
He actually did say that off camera, or just to let everybody know. No, I think not to repeat what we've already said, but I do think it is sort of the driving factor in why we've had success and what we offer. And what we offer is expertise in segments that other people don't either have or want the expertise, right? And so what we offer is, I think, intellectual curiosity and patience when opportunities come to us that other people might say, no, that doesn't fit in my box, right? So much of lending on the commercial scale is, here are the parameters you're allowed to do, here are the credit ratings you have the appetite for, here's the deal sizes and so forth. And, a lot of people will say this, but with us, with Macquarie, I think it's really true. Like, there is no box, right? There's certain, like, we're not going to do something in Sudan, right? But for the most part, if something is within a reasonable jurisdiction, there's a way we can structure a financing around it, right? It might not be something that's necessarily palatable for a customer, but we can do the sorts of deals that other people just wouldn't have the patience to try and put together.
Great banker answer. As the equipment guy, like, I'll make it even a bit simpler, right? Like, we've heard continually today through all the presentations here at Thrive, capital assets in the field are key, and what direction that's going. We're here to help those customers deploy those assets, right? We can be the capital behind it. We understand the technologies and so on like that. But if the customers need certain assets, if they've got the cash to pay for it, great. Or if they need a certain solution, as we mentioned, low payments, return options, balance sheet, accounting solutions, that's what we can do to get those assets in the field.
I like it.
Yeah.
So, have you guys ever been on a podcast before?
This is my maiden voyage. I don't know about you,
Yeah,
Phil.
that's my first ride.
Well, it is a steep fall from here.
Is there some like cliche thing you've got to do, like a shoey or something in your in your first podcast or something?
No. This is just people try to take these things too seriously, and they forget what this is about. Like I've actually learned a lot. I really have. Like I've thoroughly enjoyed this, and I didn't actually know that this kind of stuff existed. I really didn't. You said I've been doing my job, and in my head I'm like, dude, I didn't know that existed. I really didn't. I appreciate the education on this thing.
Conferences are funny in that, you kind of feel guilty for not, getting out of bed and dragging yourself to a particular conference. But the reality is a lot of them are a waste of time. This is not one of those.
Ooh, I like to hear that.
And particularly because there's a lot of people who actually make decisions here,
Yep.
right? And so the more we can spread this message in this forum, I think there's real value in that. So we really appreciate you guys having us on.
Well, and again, we talk about this all the time. You guys, we've had lots of guests. You guys, first of all, thank you for waiting to get on. And two, like, it's when you're cool and smart and know your stuff, and you can go from Tennessee to the West Virginia mines and wherever you have to go, and the steward, they're waiting to talk to you guys. You know what I mean? Like, you have people waiting to talk to you when we're done here. Like, this is clearly you guys are working hard and grinding this thing out of whether it be New York and Tennessee. So, Richard and I thank you very much. Is there anything we've left out here?
I don't think so.
No.
I mean, do you want to talk about like Aussie rules football or?
No.
No, you guys wouldn't like it. If you look these people up on LinkedIn, Phil is he's gross looking.
I'm not even on LinkedIn, so there you go.
Oh, exactly.
You're not.
He's
Exactly.
too handsome for that.
Just like some mystique.
Too handsome.
Just
It's
some
gross.
mystique around it. Yeah.
How tall are you?
I'm only 6'3", mate.
Ah, gross.
Only.
Gross. His hair is long. It smells like cinnamon.
For the record, I look bald on camera, but I'm not actually bald.
Richard, we just nailed it.
It was, when we have great guests, you guys make it so easy, and it flies by, and I can't believe we're already done.
Well, gentlemen, thank you very much. If you have any questions, find you guys, well, you at least on LinkedIn, I assume.
Yes.
Jim Gordon, Phil Lavis, thank you guys. Thank you, Macquarie Group. Thank you for sponsoring the Happy Hour. Thank you for being part of Thrive. Thank you for being a part of the It Crowd. Gentlemen,
You bet.
we appreciate it.
And it's so good to see the two of you together again.
By the way, as you know, audience, I'm looking at the camera here. If you have any complaints, send those to Richard. If you have anything that's good, send it to me. Look us up on all our social media. Thank you for being. By the podcast is blowing up. You have no idea how famous you're about to be. It's
You're going to
incredible.
be going through the airport, and it's like, I saw you.
Richard, it's good to see you, buddy.
You too, bud.
See you. Thanks.